Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, February 11th, 2026, and here is everything you need to know as the markets open for today. Overnight on Wall Street, US equities had a mixed close, but the overall trend at the index level remains constructive. The Dow Jones Industrial Average inched up to about 50,188, a fresh record, gaining around 0.10%. The S&P 500 slipped roughly 0.33% to finish near 6,942, while the Nasdaq, using the Nasdaq 100 as a proxy, fell about 0.56% to trade around 25,128. The main talking point was softer than expected December retail sales in the US, which came in essentially flat against expectations of a healthy positive print, and that reinforced the idea that the American consumer is finally slowing after powering growth last year. That weaker data pulled bond yields a bit lower and revived hopes that the Federal Reserve will have room to cut rates later this year, even as Fed officials keep repeating that they want to see a few more months of stable inflation before acting. Under the surface, growth and tech names saw some profit-taking, while more traditional Dow components held up better, which is why the Dow managed a record even as the S&P and Nasdaq eased. Financials remained under pressure, with several large banks and wealth managers slipping on worries that rapid adoption of artificial intelligence could squeeze fee income over time. On the positive side, a handful of earnings names including high-profile consumer and media stocks delivered better than expected numbers and guidance, reminding investors that stock-specific stories still matter even in a macro-driven tape. In after-hours trade, US index futures were marginally higher, suggesting that traders are now focused on the delayed January jobs report and inflation data later this week, both of which could quickly reset expectations on the timing and pace of Fed rate cuts. Let's bring it closer to home with the Indian ADRs, because that is where you can read foreign investor appetite for key Indian stories. Infosys ADR in New York closed at $16.61, up 1.84% overnight, and that continues the recent stabilization in Indian IT after a choppy few weeks. HDFC Bank's ADR ended at $33.99, up 0.38%, which points to steady rather than euphoric foreign interest in the largest private lender. ICICI Bank's ADR did even better, finishing at $31.15, up 1.33%, signaling that global investors still like Indian private financials as a core India play. Reliance's London-listed GDR closed at $64.8, up 0.15%, which is a small but positive move, and suggests no fresh overseas overhang on the stock. Overall, the ADR picture tells you that, as of the latest available data, global investors remain constructive on India's IT and private banking space, and are comfortable owning Reliance on a steady long-term basis. Now to Asia, where markets are trading live as we speak, and will heavily influence early sentiment in India. In Japan, the Nikkei 225 is open and trading firm around 58,247, up about 0.47% in early moves. That strength reflects continued optimism around earnings, fiscal support, and an environment where the Bank of Japan is normalizing policy very slowly, keeping real yields supportive for equities. Hong Kong's Hang Seng, tracked here via the HS50 cash index, is also trading live but slightly in the red, hovering near 27,225, down about 0.12%. That small dip follows a strong run in Chinese tech and property stocks and shows some natural profit booking as investors watch the next set of data from China. On the mainland, the Shanghai Composite Total Return Index is around 4,734, up close to 0.13% as per the latest available data, indicating that the market is trying to stabilize with the help of policy support, even though underlying growth worries have not completely gone away. For the Indian Open, the key early gauge is GIFT Nifty. The latest GIFT Nifty 50 futures quote is about 26,052, up roughly 0.35%. Which signals a mildly positive start for the Nifty 50 at the cash open. The combination of firm Japan, a broadly steady China complex, and a green GIFT Nifty tells you that Asia is not adding any extra stress on top of the slight wobble we saw in US Dec overnight. On the global news and geopolitics side, there are a few big themes you should keep in mind because they directly shape risk sentiment and flows into emerging markets like India. First, the flat US retail sales print for December has added to the narrative that US consumption is cooling, and together with the delayed January jobs report and the upcoming inflation numbers, it is pushing traders to reprice the Fed's path towards more cuts later this year. The White House itself has been guiding markets to expect a softer jobs report, which is unusual and tells you that policymakers are trying to prepare investors for some weakness. Second, crude oil remains caught in a tug-of-war. US-Iran tensions and US advisories for ships to avoid Iranian waters keep a geopolitical risk premium alive, but the International Energy Agency and other forecasters still see a sizable supply surplus this year as non-OPEC producers ramp up output. Third, the new US-India trade deal announced recently by President Trump, which aims to reduce tariffs on both sides and encourages India to rethink its dependence on discounted Russian crude, is a medium-term story that could reshape India's trade balance and sector winners if it translates into concrete policy and volume shifts. Against the backdrop of ongoing conflicts and headline risk, markets are still choosing to focus more on the Fed, earnings and growth data, but any escalation on the geopolitical front can quickly spill into crude, currencies, and safe haven assets. Shifting focus back to Dalal Street, Indian equities extended their positive streak in Tuesday's session. The Nifty 50 closed around 25,935, up roughly 0.26%, while the Sensex finished just above 84,270, up about 0.25%. That makes it 3 straight sessions of gains and keeps both indices within touching distance of record highs. Bank Nifty underperformed slightly, closing near 60,600 levels with a marginal negative bias, as private and PSU banks paused after a strong run, even while autos, metals and media stocks saw renewed buying interest. On the flows front, foreign institutional investors were modest net buyers in the cash market, adding a small positive number, while domestic institutional investors came in with significantly larger net purchases, reinforcing the trend that local money is providing a strong flow for any dip. In the primary market, Fractal Analytics continues to draw attention with its analytics and AI-driven business model as its issue stays on investor radar, and the listing of NFP Sampurna Foods on the SME platform reflects the ongoing depth and breadth of India's IPO pipeline. Let's talk levels and setups, because that is what many of you will trade around during the day. For the Nifty 50, immediate support is seen around 25,800, with a stronger support zone near 25,700. As long as the index holds above this band, the underlying structure remains a buy on dips market rather than a sell the rally one. On the upside, the psychological 26,000 mark continues to act as a key resistance, with further supply zones expected between roughly 26,060 and 26,200. Several technical studies point out that Nifty is hovering close to the upper end of its recent trading channel, so a clean breakout above that 26,000 plus band, backed by strong volumes, would be needed to unlock the next leg higher. For Bank Nifty, immediate support is clustered around 60,500, with a broader base near 60,000, while resistance is seen in the 60,900 to 61,500 zone. The index has been consolidating in this range, hinting at a more range-bound to slightly bullish structure rather than a runaway trend, until those upper levels are convincingly taken out. Volatility remains relatively low, which favors disciplined options writers, but with major global data due, traders should be prepared for a quick spike in volatility if the numbers surprise. In the commodity space, the backdrop remains mixed but manageable from an Indian equity perspective. WTI crude oil is trading near $64.27 a barrel, up about 0.12% in the latest session. At these mid-60 levels, crude is elevated compared to last year's lows, but still not at levels that force immediate panic on inflation or the current account, though it does keep some pressure on fuel-intensive sectors and margins. Gold, tracked via CFDs on gold in US dollars per ounce, is around $5,037, up close to 0.26%, reflecting steady safe haven demand as investors hedge against policy uncertainty and geopolitical risks. Silver is near $81.45 an ounce, up about 0.81%, continuing its recent outperformance within precious metals and benefiting from both safe haven and industrial demand narratives. Natural gas is around $3.07, down about 0.77%, which eases some cost pressure for gas-intensive industries globally. For Indian markets, this combination of firm but not spiking crude and resilient precious metals suggests that global macro is neither giving a strong tailwind nor a major headwind right now. It is more about stock and sector selection. So how should you think about your day plan in this kind of environment? With Gift Nifty indicating a mildly positive open around 26,050 levels, and Nifty supports clearly defined near 25,800 and 25,700, the broader trend remains constructive, but capped as long as we stay below the 26,000 to 26,200 resistance belt. That means it usually makes more sense to avoid chasing gap-up moves right into resistance zones, and instead look for buying opportunities closer to identified supports, especially in sectors where the fundamental story aligns with the prevailing global themes like quality financials, domestic demand-driven autos, and selectively IT, where ADRs are showing strength. Given SEBI's ongoing tightening of F&O rules and the significant US data releases on the calendar, it is also a day to be very disciplined on position sizing, leverage, and stop losses. Focus on clearly defined risk, respect the ranges on Nifty and Bank Nifty, and resist the temptation to overtrade short-dated options purely on intraday noise. That's it from me on this morning's edition of What Will Move the Market. Trade safe, stay curious, and remember that protecting capital is as important as chasing returns. Stay tuned for the evening wrap, send in your questions, and subscribe to this podcast to hear US every day.